Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for January 14th, 2018. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.94 fell slightly from 1.97 last week, remaining within bullish territory. The total count of securities in bullish or bearish patterns increased 5% to 3,471. The count of bearish stocks increased 6%, while the count of stocks in bullish patterns increased 4%. The Pirls P&F Market Breadth Summary Chart shows us a market now 20 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 123 points for the fifth advance in 13 weeks. At a positive 322.21 points, it has risen above the August 2017 high and continues below all 6 remaining tops in the last 30 months, as well as continuing above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 0 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. Following the successful conclusion of last week's trade simulation, the CCI 20 daily in a Woody's uptrend is now at a positive 154.17, down from a positive 201.69 last week. At Friday 12/29 close, the CCI 20 daily was within the plus or minus 50 range, presenting a zero line reject pivot and long entry signal at Tuesday 1/2 close. We will follow the results of this trade simulation in next week's commentary and plan to exit when the CCI 20 daily falls below plus 100. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 89 weeks ago, while the daily CCI 20 began a Woody's uptrend 18 weeks ago. The CCI 20 weekly, at a positive 169.48, is up from a positive 137.15 last week, after forming a zero line reject long entry signal for Tuesday 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 3 of the bottom 5 are negative. Summary: oil services, oil, S&P retail, and some tech on top. Gold and silver and REITs on the bottom. Bullish, S&P Retail and Computer Hardware have entered the top 5. Gold and silver has left the top 5 and entered the bottom 5. Networkers has left the bottom 5. Bearish REITs continues in the bottom 5. Oil services and oil continue in the top 5. Focus this week from www.zerohedge.com by Errico Matthias Tavares of Sinclair & Company. The U.S. economy. Full steam ahead? This excellent report includes many charts and graphs analyzing various sectors of the economy. Please click the link above to read the report. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a short, however, prosperous and productive week coming up, and wishing you true success.